Our next speaker is Zac Mannes. Zachary Mannes is a senior analyst at ElliottWaveTrader.net, covering U.S. stocks. One of the founding members of the site, Zac became the second Elliott Wave Trader analyst after Avi Gilbert. Today, he co-hosts the premium service Stock Waves with Garrett Patton, providing wave analysis on U.S. stocks, and also co-hosts the site's weekly Beginner Circle webinar for new members. Zac's topic is rotation opportunities. With recent market volatility creating new opportunities, Zac will highlight areas where he believes traders and investors can pivot their portfolio for maximum gains. Welcome, Zac.
All right, thank you, Jody. So what I wanted to talk about today is how we use the coverage that we provide in stock waves and the way that we present that coverage in stock waves and the metals, miners, and agriculture setup, particularly the wave setups, as well as the deep dives that we do into the different sectors to look for rotation opportunities. And I know most of the people here are well-versed in Elliott Wave, but I thought a quick little primer just to show the main structures that we're looking for might be well in order. So Elliott Wave divides up into motive waves, which advance patterns, and then corrective waves, which retrace the patterns. And we use the combination of both and because it's fractal, where the same motive wave and corrective wave can be the 1-2 of even a larger structure. So we look for those repeating elements to give us clues as to what things are going to do next, and following those rules to know when things are not behaving the way that they should. Now, our motive waves divide into two basic structures: the impulsive structure, where you have more aggressive trending price action as a 5-wave move that follows specific rules. And then you have your diagonals, which are still advancing the price, but they're doing it in a choppier, overlapping manner, where all of the subwaves, not just waves 2 and wave 4, are corrective structures, usually ABCs. Now, the major advancement that I think that our founder of Elliott Wave Trader, and where stock waves and the metals, minings, and agriculture are part of our services, is Avi Gilbert noticed something which he started to call Fibonacci pinball. And rather than just looking for a particular extension region for Fibonacci projections for a third wave, he noticed some very specific behavior of the subwaves within that third that could be used with very high frequency and regularity to know that you're on the right path and as a predictive model. And that is what he calls Fibonacci pinball. And that suggests that after you have a 1-2 in place, that the wave 1 inside your third will head to either the 382, the 0.50, or the 618. Then after your normal retrace for the sub wave 2, that your wave 3 will then head to either the 100% or the 1236. And then after normal guidelines supports for the wave 4, the 5 of 3 will then head to either the 1382 or the 1618. You can then continue to use the same Fibonacci extension off of the actual wave 2 for support levels and guidelines for your wave 4, and then also the Fib extensions for your wave 5, with that getting to either the 176 or the 200%. Also, just, if your 3 goes 1 fib higher, or this 3 goes even 1 fib higher, then a lot of times that just translates to it going to the next higher one in the next degree within that same fib extension pattern. So this is one of the tools that we've added to our utility belt that we use a lot for our wave setups and for other aspects. There is more information on that. I'll leave this screen up for just a minute if you guys want to snap that QR code, or I can put it up again at the end. We have a pretty robust free education section with a lot of different articles and some videos and webinars, so feel free to check that out. I also thought that it's important to start with a little context on where we view the broader market at various degrees before we get into some of the wave setups and some of the things where we think things are going in the future. So while this is Garrett's S&P chart that incorporates historical data going all the way back to the 1800s. And we can see here the 70+ year bull market that Elliott predicted back in the 1930s, or I think 1944 is when he said he saw this 1-2 start and predicted a 70-year bull market. Then has largely played out at the larger degrees. We can count a cycle 1, 2, 3, 4, and 5 waves completing off of that off of the Great Depression low, which is the super cycle wave 2, and that can be nearing completion of a super cycle wave 3 that allows for a pretty decent size consolidation, which would be 1 degree larger at least than the Great Recession of 2008. And even within that cycle degree wave 5 off of the 2009 lows, we can count 5 waves up at the primary degree completing. But within that primary wave 5 off of the COVID lows, there are counts that allow for further extension. No key supports have been broken yet. But I think what's important to take away from this chart is starting to know what's ahead. Look at this from a standpoint of risk skew, so that you're being very selective in evaluating any of the long setups, and also using this to say, okay, maybe I need to start looking for more and more short setups of the things that have broken some support or have made key lower highs that have clearly defined risk reward on the short side, and starting to incorporate those into my trading. It is very much a not all the same market. Off of the COVID low, we still had a lot of things that rallied very strongly together, but off of 2022 lows, we're starting to see a lot more different areas of the market that are making some pretty key divergences. So we incorporate a lot of that into our assessments and what we look at in stock waves, as well as in the metals and miners service. The big features in stock waves, in addition to having Garrett and I providing ongoing Elliott Wave analysis of literally hundreds, if not well over 1,000 stocks, with the robust search and request options that are incorporated into the service, is our presentation of wave setups. And these are a practical and specific tradable application of Elliott Wave, highlighting favorable risk reward opportunities. But before we jump into some of the examples from there, I wanted to start with a quick lead-in of some of our earnings work. One of the things that we started to focus on in stock waves many years ago, and stock waves is now in our 13th, or actually we might be in our 14th year now, was looking at stocks that were reporting earnings either after the market closed that day or the things that would be reporting before the market opened the following day. Initially, this was just looking out for some of our members that had very, very large, very, very, very diversified portfolios. And with those many holdings, they saw earnings season as a treacherous landscape with lots of pitfalls. But quickly, we started to see the potential for clear opportunities to emerge in both directions. So here is a Crocs chart that before we get into the Crocs wave setup that I wanted to talk about, I wanted to talk about the setup for a drop that we saw back here in July 2023, specifically on earnings, where we have a clear ABC corrective consolidation, as the B wave, at a lower high, about a 50% to 618 retrace of this initial move down. So the larger degree, we were looking for a bigger ABC move down for this parentheses B wave into fib support, and we're projecting a move down as a 5-wave C wave into that support zone. But heading into earnings, we had a move that easily counted as all of that C of B and a little start to that wave 1. On following earnings, following that July 26th earning, or I guess it was July 27th before market opened, it went on to drop hard, dropping about -17% to get more of this wave 1 in the start of that projected C wave down. Fast forward into November, of 2023, and it had filled out more of this 5-wave move down for the C wave of our parentheses B wave right into a 618 retrace. Now, things don't always stop and turn on the dime at those fib levels. Those are really meant to be more general regions, but they are, you know, that 382 to 50% to 618 Fibonacci zone, whether it's a B wave or a wave 2, is such a high probability region that really provides a sweet spot that we use. And then as we get under that support region, that's where we start to put our invalidation levels, at least for the wave setups. While something might not purely invalidate on an Elliott wave basis, if it drops under a 764 retrace, usually the probability of follow through greatly diminishes. So it might be something that we still track the chart, even if it is invalidated the wave setup. It might be a valid Elliott wave chart, but the probability for follow through from what we're seeing at this snapshot in time would greatly be reduced. So in November 2023, it had nicely filled out that 5 waves down for the C wave of the parentheses B. And we were looking then for a projected 5-wave up move as the parentheses C wave for primary wave 5 of a larger diagonal. So that's where, you know, even though this isn't an impulsive structure, it still has nice potential for upside. So we posted a conservative target of 233. We clearly outlined that it's along where our support level is at 76, the invalidation level just under 71. First resistance region of 110, which is where we're looking for an initial move up as wave 1 of that C wave. The target we set is 233. Here we use a time, the moniker M denotes months, where it's meant to be multi-month move, but probably less than a year, or maybe only right around a year, but not significantly more than a year. And then a ranking, which is really for more of a different project. Most things, if they're going to be a wave setup, are going to be a ranking of a 3 or a 4. It's on a scale of actually -4, but we just use 1 to 4. The spreadsheet converts it to a negative for the other system we're using that for. So we lay out those support, invalidation, resistance, and target levels. And then as things reach a resistance level, they get an official update. So we're probably going to provide a couple dozen charts, and some of these things that are active wave setups often get a chart posted on them daily along as they fill out on the path, but that's not an official update to the wave setup. The official updates to the wave setups come when they hit levels that we've assigned as resistance or the initial target levels. And then they get a very more robust update that has a lot more text and verbiage than just an updated smaller time frame chart. So here, Crocs has been updated many times since that initial November wave setup, but this is an example of one of those updates from March that shows how the support, invalidation, and resistance levels have been adjusted higher from the initial levels because it hit that resistance, that first resistance level of the well, this had already been raised one time from 115, I think is what we said initially, up to 136, and now we're raising it even higher to 149 next from that 136. It went on to fill out the rest of this small degree 4-5 inside the C wave higher, getting up to 165 region before we were looking for that fade as the wave 2. And it, of course, got more recent updates into after that, into that November high, or not November high, after this March update, as it filled out the rest of that 4-5. Since then, it filled out what I'm still counting as the wave 2. Usually, Garrett and I are counting things very, very closely. Sometimes we might lean a little bit more to what the other person is considering an alt, but there's usually going to be overlap. So this is still my chart with the same wave 2 we were looking for that came down to a 764. Since this got a little bit higher than what we normally see as wave 1 of a parentheses C wave, and then the wave 2 got a little bit deeper, Garrett has shifted to moving this A wave over as a larger A and B, but it still is holding the same 50% fib for him as this very clean three-wave retrace into the February 11th low on February 12th, ahead of the most recent earnings. Then it got a really, really nice pop on the 13th, and really starting to mark this as a bottom. It's consolidating nicely after that initial pop. And now that we have a move off of that key support level, we can make this a new wave setup soon, looking for just the rest of that C wave of the parentheses wave 3. Another one of our favorites is BLDR. Back in August of 2022, it was holding a nice 1-2 start, allowing for a little bit more of that wave 2 retrace, start to a fifth wave of the C of a primary wave 3. Again, there's a lot of larger degree diagonals, but we don't shy away from them in stock waves. We embrace the ebb and flow, and I think one way of looking at it that I like to appreciate is that you can actually have more linear travel if you're looking for separating out all of the different component moves and looking maybe for some scalps in both directions than with a standard impulse. And you have more time to play those different moves. It got a little bit deeper for the wave 2, but did not invalidate into the October 2022 low. And then it got a very nice extension heading up all the way into the 150s, which was past our initial target into the August 2023 high. From there, it was possible that that was all of that fifth of the C wave of the primary wave 3, but into the October 2023 low, we were holding a clean corrective retrace into possible support, allowing for another fifth wave extension heading up towards the 190s and maybe even over the 200 level. So at that time, we set up another small degree or intermediate degree wave setup because we thought this would take more than just a few weeks for that additional fifth wave higher, but with a little bit different parameters, looking for this support region to hold and just to move up towards that 190s. Following that, it soared another 90%. As it filled out the rest of that circle wave 5 into the 219 region, and then has since been filling out nicely as more of this A wave. Alcoa is another great example where we knew that we were coming into a very significant bottom at a larger degree. At the time, back in November, end of November of 2023, we didn't have a lot of information off of that significant low, but we did have a very high probability diagonal completing. So even though we didn't have a clear 5-wave up, 3-wave down move off of that low, the risk reward looking for more of a larger wave 1 to start off of that significant bottom was great. So at the time, posted a new wave setup for that. Looking for the 71 region for just this wave 1 in the start of a primary degree move. At the time, support was a little bit, was probably this slightly higher low, but then validation level was just the low that had been recently made. So it got an official update last May after it did reach the resistance, that first resistance region for wave 1. But in the official update to the wave setup, we noted how the pattern had morphed and it did not fill out 5 waves up as wave 1 of that wave 1. It looked very clearly like an ABC move, where that would be wave 1 of a leading diagonal for the parentheses wave 1. So we tightened up the support, resistance, and invalidation. Well, tightened up the support and invalidation levels, assigned a new resistance level, but we're looking for a deeper retrace as the wave 2 in a move that was probably going to stretch out a lot longer in time just to get to that initial target. It did fill out more of that wave 2 retrace, got to move off the low and then retrace to a higher low. So in August of 2024, when we were holding a move up and a higher low off that wave 2, we changed that old wave setup that was initially done as an M for months looking for the parentheses wave 1 off of this primary wave 2 low. We changed that to a more longer term Y wave setup. And then at that time added a new M wave setup, just looking for a move to 41 as more of this A of 3 in the diagonal structure. So we knew to expect a move up into either the 618 or the 764 of the wave 3 extensions. So that was a good initial target to use for at least a measured move. And we hit that and then exceeded it and extended up towards the 45.50s 5 region. And then since then, we've held, so that hit those targets and we tightened up support and invalidation so that that would kind of force an exit. And since then, we have retraced down to a 618 and are trying to hold a nominally higher low off of that 618 retrace. And so this can also be due for another wave setup very soon if we can see this hold and start to advance more in a possible wave 1 start to that C of 3. Before we go on to some other wave setup examples, I wanted to use Alcoa as a segue for a little tangent into materials. I've talked about ratio charts before when I've presented here for Jody. I like them and I like applying Elliott Wave to them as long as you remember that more often they should act as oscillators rather than long-term trending charts. You can still sometimes see 5 waves up, like this is the SPY to gold GLD ratio, where off of the 2011 extreme, we can see 5 waves up. But I don't know if this is necessarily a wave 1 and going to fill out a retrace as a wave 2. We are looking for a corrective oscillation back down into at least what we would consider bullish support if this is going to set up for another move higher, or just the start of an even bigger retrace that comes back down more to extreme regions on that. But it does still scream that as long as we stay under this resistance level, that we should continue to see gold outperform relative to equities. That doesn't necessarily a ratio chart. It's important to know that it does not tell you any particular direction of either instrument, just which instrument should be doing better. We also track the gold to silver ratio in the metals, miners, and agriculture service and see potential for outperformance there as well. And we'll get back to that later. This chart doesn't actually look much different from the one that I shared back in August when I was here, other than just continuing to leak a little bit lower from the resistance, the higher low that we saw back here. So got a little bit of a wider flat and continues to head down from there. So last time we used that SPY GLD chart as a segue to talk about XME or the materials ETF. This is the XME chart that we shared from back on August 27th when we presented here at the Elliott Wave Hub, looking for the start of a C wave up of this wave 3 in a larger ending diagonal for this green primary wave 5 off of the 2022 lows. So we also showed that with some of the, on every Thursday, I mentioned that we do a webinar, and Garrett and I start the webinar by looking at a particular sector and then drilling down into some of the key holdings of that sector to see which ones tend to agree with each other, which ones agree with the index, which ones can be the weak links, and which ones should be emerge as the leaders. And we saw back in August that the steel names from XME did not look like they had the strength to be the leaders, but we use that as a segue into talking about NEM and some other gold and silver miners, which have done very, very well. Since that August presentation, XME got a really, really nice move off of that support for the B wave as a wave 1 start, and has since held a higher low as a retrace for a 1-2 start to the C wave, and even has a little nice 5 wave up leading diagonal off of that as well. So we did talk about NEM before. I want to bring it up here again. We follow NEM very, very closely in the Metals, Miners, and Agriculture service. This is a post from that service. Because we have a dedicated service that focuses on metals, mining, and agriculture, Most of our, at least precious metals miners, are covered only in that MMA service, but we offer a nice discount when it's combined with stock waves. It is the largest component of GDX, and so looking to what NEM is doing can often give you some clues when there seems to be some discrepancy over what the Elliott Wave structure is showing in GDX itself. So we saw a year ago that it was coming into significant support for a primary degree B wave, just shy of a 618 retrace, filling out this nice ending diagonal for the parentheses wave C. So we knew to expect a pretty nice reversal, and that would be a very, very good move to trade. Once it started to show some signs off the low at the beginning of March, we added it as a long-term wave setup, looking for a move up to 58 as just wave 1 in that primary degree C wave starting. So some people say C wave, that doesn't sound very bullish, but when you're talking about very, very large degrees, even just the wave 1 of a C wave, which should be a 5-wave move, can present itself as a possible impulse and be a very nice cover a lot of ground. So it certainly held on to that low as invalidation and gave us a nice move into resistance. We were able to update that a couple of times as it filled out to its target. It did hit the 58 target into October for wave 1, but into that high, it actually looked more like an ABC move up as opposed to a 5-wave impulse. So that suggested that the primary degree C wave, starting off of the February 2024 low, was going to fill out as an ending diagonal. But as an ending diagonal, this might have been a little bit lower than ideal for all of wave 1. So I added an alt count here with the green notation, where instead of this being ABC up for wave 1, this could be ABC up for an even larger A wave of a bigger parentheses wave 1. But regardless, it still gave us a nice retrace down to the 618 to 764 fib zone, and then started to turn up nicely from there. Even though this looks more like an ABC move up off the low, it does look like a pretty good looking start, especially if we are starting the ABC up of a parentheses wave 3. This fits nicely as the AB wave of the A wave of that A wave, which, as you guys know, A waves most of the time are going to be ABC moves. So when you're looking for a larger degree A wave, whether it's in a bigger correction or whether it's in a diagonal, it's better to focus on the possible increasingly larger ABC structures that you can see there, rather than being disappointed when you don't get a clean 5 waves up, 3 wave down. So if you are expecting just the increasingly larger corrective waves and being attuned to the possible retraces as the Bs, then they won't hit you as rogue B waves and bother you a lot. So I said we'd come back to the gold to silver ratio. And this, as long as this continues to hold under the 95 region as a corrective looking either WXY or maybe an ABC up, then it still screams to me that that silver should be making attempts to outperform gold and have this ratio head south. When we look at the gold and silver charts, it seems like so sacrilegious to suggest that maybe they could follow different patterns, but we do clearly see, while the larger structure, they're still in the same larger diagonals off of at the primary degree. Inside of that diagonal, gold has clearly filled out most of the C wave of wave parentheses wave 3 off of the summer lows for its B wave, and silver dropped lower when gold held as a wave 2 here as a B wave, and then has only held back as a possible 1-2 start to what could be a much more extended move. So either there's an alt here where this could be a very, very muted version of the same parentheses 3 that gold is finishing, but I like the potential for silver to be ready to outperform. And while I have this stretched out well into 2025, this part of the move, at least the third wave, even though it's a diagonal, could be very, very quick and get up into the 40 region before it needs a fourth and a fifth wave. So with that outperformance for silver in mind, back in August, we added a wave setup for SILJ, the junior silver miners. This was actually pretty hot off the presses when we presented on the 27th here for Jody. And this was looking for the start of a third wave, or a third wave targeting the 21 region inside this bigger parentheses wave C on SILJ. Now, after that move off that low, we got a very, very nice move up through the initial 13 resistance and then up to the next resistance level from there. But it never quite filled out a clean 5 waves up as wave 1 of 3. And when it fell back under the raised support level in the 13s, it went on to fill out a wider expanded flat for this wave 2. But we added it back as a new wave setup in January and are continuing to track it, getting 5 waves up off the low if it can hold in this 11 region and move back up towards 13 resistance as a 5th wave of a leading diagonal. We added also PAAS and AGI as some other key silver names. Having short setups has also been a great balance in stock waves, and Adobe here presented itself as a great short opportunity as the intermediate parentheses 1-2 start to a larger primary degree C wave down in a cycle degree wave 4 back in July. And it did fill out a little bit of a wider flat for that wave 2, nominally higher to get to the 764, but that did not invalidate the initial wave setup from back in July. And then from there, filled out another minor degree 1-2 start inside that parentheses wave 3 into the December 11th earnings. So set to report after the market close. And I highlighted for our members that it clearly looked like a WXY or maybe an ABC that allowed for one more high, but ideally a WXY for that wave 2 completing right at the 764 and set up to move down on or shortly after earnings. So it did drop pretty substantially immediately after that, but dropped so fast it didn't give us a clean 1-2 start to the C, what would have been a C wave, or what would have been the third of this parentheses wave 3, and instead looked more like it was morphing into an ending diagonal for the larger primary degree C wave, where this is an A, B, and a C as the A wave of parentheses wave 3, and now we're getting this bounce that we've been looking for as a consolidation for a B wave, and can possibly be starting the next leg down pretty soon. AMD was another short wave setup that we saw back in October. We saw very clearly that it was filling out this ABC consolidation into the normal fib resistance as either this parentheses wave 2 or the alt count was as an A and a B wave in purple, counting instead of this counting as a B wave high, counting this as 5 waves up for the cycle A wave, which was the alt count that Garrett leaned a little bit more to. But as I mentioned before, usually Garrett and I are pretty closely in agreement, or if we're slightly, one person is leaning a little bit more to a different alt, usually there's a lot of overlap. And whether this was a 1-2 as ABC down for the wave 1 at the start of a diagonal, or the purple A wave and a B wave, the same ABC structure presented itself for a short opportunity, targeting a move down into the 70s. So that has continued to drift nicely lower, but because it didn't get more of this B wave here inside the structure for the diagonal in gray, so I grayed that out, and it looks far more like it is filling out as an ending diagonal for the purple C wave, which would move this primary A wave over. And so instead of getting a bounce as a wave 4 from there, it could get a bigger A, B, and C wave bounce for a purple B wave a little bit higher. But should still continue to fill out and drift lower in that short setup. At the same time, we were tracking a very different bullish extension path in NVIDIA. It clearly continued to get higher after that October short setup for AMD, where it continued to drift lower from there. And so while these are two major components of the semiconductors, they have been moving a little bit different directions. Now, it got a little bit more than what we wanted to see for this fourth wave, but then recovered very, very nicely, getting 5 waves up as the A wave inside the fifth, and still is holding support now as a B wave retrace, allowing for a move up to a new high over that it made in November. AVGO and TSM also very closely resembled this NVIDIA chart, which is made for a very interesting development because so here's the AVGO that's showing it at the same A-B setup inside that purple wave 5. Using purple here, it's one of the colors that I use to color code and show highlight diagonal structure, but also sometimes I do that when multiple names in a sector are showing a similar pattern, just so that people can see that and it's color coded along with those other names. So because NVIDIA, AVGO, and TSM are the top 3 holdings in SMH, but are weighted more strongly there so that they combine for over 40% of that ETF, it's greatly skewed the SMH chart relative to SOXX, which is the ETF that more closely follows the Philadelphia SOX Semiconductor Index. We actually have an active short wave setup on SOXX while we've been looking for those long plays in NVIDIA and in TSM and AVGO. And a lot of our members have been able to use the various leverage instruments or just options on these to trade them accordingly, because we have been continuing to fill out the potential for holding a corrective retrace for a setup for a new high in the SMH names, as well as the possible start to the third of a C wave in SOXX. And with the also very clear with the understanding that if we do get a very exaggerated blow off top type move in those big 3 from SMH and SMH itself, that's going to pull, even though the many other semiconductor names have a lower weighting and representation in SMH, it can start to pull those up and break over resistance that has the downside set up in SOXX and pull that up to what would probably be a funky, muted, or even truncated version of this same ending diagonal extension. But it's been a lot of fun to watch. MP is another favorite of ours, drawing back from the XME ETF sector. It's not in the top 10 of XME, but it still is probably the top 15 or 20, is at a respectable 3%. So we knew back in December when it was holding right around the 50% retrace is a nice 3-wave decline. Even though this was not clearly all of the wave 2, we were in the sweet spot of support where even if it wasn't all of the wave 2, we should get a decent bounce as the B wave. And there was a chance, because we came to the 50% retrace as a clear 3-wave move down. And especially if it did just drift a little bit lower, closer to the 618, there was a greater chance that could be all of the wave 2 completing. So we chose to add it as a wave setup, allowing for deeper in the wave 2, with the first resistance region being our target zone for the B wave. Longer term target was, of course, the 40 region for more of a third wave, or at least a measured move up towards the 100% to 1236 fib zone. So it has since soared over 65% to the high, which could technically still count as a B wave and a wider flat. But if we can hold support in this 21 region, we can get a better 5th wave up for 1, 2, 3, 4, 5 waves up for this green wave 1. To count wave 1 here is a little bit funky. It's kind of forced, but that is the ideal fib zone for wave 1 of a third here. But one more push up towards 27 would actually be better, and then we can hold the 20 to 19 region again as a wave 2, and maybe even add a short-term M wave setup, just looking for this third wave of the wave 3 off of that support. Um, I couldn't start with Tesla because I knew that a lot of you guys wanted to see me get to Tesla, but if I did it earlier, then you might just leave. So I didn't necessarily save it for last. I have a few other charts that we can look at after we talk about Tesla, but I wanted to make sure I left some time for questions. So we might skip over a few other charts and get to some questions, but some of you who follow me on X, formerly Twitter, might know that I like to follow Tesla pretty closely for a number of reasons. It's a phenomenal sentiment chart. The fans of Tesla, particularly on X, formerly Twitter, are very, very avid followers of it. And it's a great way to, talking about that is a great way to gain some followers. And just people searching for the Tesla ticker and other things like that, and just are starving for information and analysis more than just basing things off of their own pure sentiment or what fundamentals they think they're using. So a year ago, we were in the ideal fib support zone, that magical 382 to 50% to 618 box for our parentheses wave 2. Possible that we were finishing up a muted C wave of that wave 2, but ideally we wanted to see more of a C wave down closer to that 170 to 153 zone. But decided it was a good opportunity to post a long-term wave setup targeting the 712 region, which is just shy of the 1382 fib for a third, which is normally a little bit higher than we expect for the third wave of a diagonal. We have a very clear ABC move up for wave 1 of the diagonal. And I have a pretty extensive thread that I talked about on Twitter and along with the beginner circle post on EWT in stock waves that talks about why I want to see a bigger ending diagonal here as opposed to the normal 100% to 1236 fibs for the wave 3. Because of where this primary wave 3 hit in the yellow fibs, our primary wave 5, going back to that Fibonacci pinball that we talked about at the beginning, we got close to a 1236 for the 3 of cycle wave 3. So our wave 5 and held normal support for a wave 4. So our primary wave 5 should ideally head towards the 1618, which is actually past 1400. So to get there, we really need a bigger ABC move closer to the 700s or 900s for just wave 3 to then get a 4-5 up towards over 1,000 and towards 1,400 to get there. If we filled out more normal proportions based on the size of the 1-2, then we'd only get up around this 700 region for all of that primary wave 5 of 3. But we knew that this 700 region was going to be a good long-term target zone and set this as a wave setup a year ago. After tracking the fade, well, we got an initial move up. The fade for that, hold on, go back. So it did get lower into April to 1382, but our invalidation level was 128. So we did not invalidate. We left room for deeper in that wave 2. And it then launched up strongly past this initial 225 resistance region, which is the A wave zone for the A wave of wave 3. And then even getting a little bit further than that. But then held the B wave for that of the A wave. So getting a roughly 95% move just up to that A wave off of that wave 2 low. So then in October, after holding the B wave retrace, this is zoomed into a 2-hour chart, we decided to make a new wave setup at a smaller degree. This is an M wave setup. Just looking at this as the 1-2 start inside that C wave of the A wave that we were looking at that was targeting the 353 to 414 region inside that A wave of the larger parentheses wave 3. So it held that support nicely. It was still holding that support heading into the October 23rd earnings. So posted our earnings setup, our earnings call with a call for it going up because it was still holding right at that same support that we had the smaller degree wave setup. So we had a long-term wave setup, an intermediate-term wave setup, and now we have a short-term call for just a pop on earnings. And it definitely popped very, very nicely, up about 30% right after earnings, consolidated from that initial earnings pop. And then we saw the nice move on elections and has continued to be on a tear up into new all-time highs into December. From there, we had hit more than what our target was for just the A wave. So we did need to start to consider that we were maybe further along. But again, I posted a big thread on why I still lean to the white count. White is always going to be my primary unless I discuss specifically why I'm leaning a different way. But because of the way that Avi and Garrett are counting, I thought it was important to put their account, which was the purple, on my charts as well. But since then, we've been filling out nicely as at least the ABC for an A wave and a wider flat for the B wave. But because we did hit that 302 level today, it is very possible that this is all of the B wave. Now, I've posted a number of times, both for our members and even more publicly, that the prudent approach to this, when you have a clearly corrective move into the top region of support, and you have an alt count that allows for a move to a higher high, your primary count, even if this isn't the start of the C wave, would allow for a nice bounce up towards the 420 region as a B wave. And there's a chance that this gets more than a B wave and starts to turn into 5 waves up as wave 1 of the C wave off of this green B. So I think when you're looking at this from a risk reward standpoint, is that the 10-minute mark, Jody? Okay, keep running, and then we'll leave some time for questions in a minute. So when you're looking at this from a risk reward standpoint, it's important to say, okay, my risk reward off of this zone of support for a fourth wave, an A wave or B wave bottoming in the 302 to 280 region is based on a move from there that at least gets up towards the 420 region. That's what I'm looking for. And if that's favorable, then getting more than that would certainly be favorable. So that's the way that I like to approach that. I'm going to pause there and see if we have any questions.
You have a few.
Okay, and then if we have some time after that, after addressing some questions, then we can look at a few other charts if we want.
Okay. So Phil is saying that you were quick on NVIDIA. He wanted to see the wave count again. And also a question, do you do anything with time?
So Elliott Wave is far more concerned with the structure of a move and the pattern and fib levels than it is with timing. But there's a subjective component that we talk about that an Elliott Wave move has to have the right look. That there's plenty of wave slappers out there that will follow the exact rules. And if you've tried to play with any of the automated counting software, you can see that somebody can program the exact rules and guidelines for Elliott Wave, and it comes up with something that just looks completely off. So you can follow the rules and get something that doesn't look like it should. So something having the right look, I tend to try and space things out a little bit more and let them happen faster, rather than think that something's going to happen really, really fast and have to continually keep moving parts of the pattern on my charts out to the right because it takes longer. But that said, you can sort of use different things like slope and different trend lines and different channels to get some idea of timing. I do a lot with Fibonacci fans and some other tools that also give some other tools that you can use for some timing. I also like to use the PSAR and the iClouds. iClouds can give you some, can provide some nice little fluffy support zones that you can look for that give you an element of timing. But we're far more concerned with the precise subwave structure and those fib levels.
And Bob is asking for GDX, please.
I actually don't have a GDX chart in my slideshow, and I'm afraid if I try and switch to a motive wave window, things might get mad at me. So I've posted a few on Twitter, and I post an update every morning in the Metals, Miners, and Agriculture service that includes gold and silver, platinum, palladium, copper, uranium, as well as GDX and usually SILJ, since we're leaning a little bit more in that direction at the moment. But it's had a really nice run in the past couple of weeks. I would love to see one more little fifth wave up off of a low today.
Okay. And James is asking, when you see that a low has occurred, how do you enter the trade?
I mean, we talk a lot about using layers. Let me see if I can go to, let's get back to Tesla. We'll use MP here as an example. So we talk a lot about using layers. So a lot of times, if I'm posting a wave setup, I'm usually taking in at least a starter position in something at the same time. You know, there's hardly a wave setup that I won't have skin in the game on. With something like MP, there was potential for this C wave, especially if it was the C wave of the parentheses wave 2 in green, to leak a little bit lower. But we were in that ideal fib zone, so that was a good opportunity to put on an initial layer. Once it gets a tiny little move off that low, you know, we start zooming in and looking at the smaller degree, and you can do the same, look for the same structure as Elliott Wave is fractal. So you can play the same risk reward games and look for the same measured move potential or 5 waves up, 3 waves down at a smaller level. Or you can just stay zoomed out and say, okay, we have a couple green bars off of what could be a significant low. So maybe I'll add another little tranche and use that recent low as my stop for that second tranche. And then when more of the potential for either maybe an A wave and a B wave inside this B wave fills out, you can add another little scalp there and say, well, that could be a 1-2 start to this wave 1 instead of just an A, B for the B wave. So add another little layer there. And then, you know, do the same thing on the reverse. As you start getting into resistance, I can tighten the stop on this tranche. I can exit some of this one. I can trim profits from this one and tighten the stop. So I can juggle that a number of different ways. But thinking of things in terms of those layers and multiple opportunities helps you from getting overextended and trying to time things and say, I need to catch this exact bottom or I'm missing the boat.
Check one, check one.
Howdy.
Hi, Stephen, you're good. We can hear you.
Sorry. I'm just
okay.
kidding. I didn't realize I was
That's
on.
okay.
No, we're just
All
taking
right.
questions. Hi, Stephen.
That's okay.
Sorry, Zach. How you doing, Zach? Sorry
Doing
about
good.
that.
All right. Question: Do you have a count on Bitcoin, Riot, or Mara?
I differ a little bit from some of my colleagues. Ryan and Jason run the crypto service. I think I'm looking for one more 4-5 in this C wave down of a fourth, but then I think we can get another high in Bitcoin up towards the 125 region, and that might be a pretty significant top for a while from there. But I added a little bit this morning of Bitcoin, but I think we're only going to get a bounce and then another low after that. So I might trim out of that position. But again, like GDX, I don't want to exit out of the PowerPoint presentation and mess up the sharing.
Understood. Okay, well, you have a couple minutes left and I don't see any more questions.
All right, well, let's see what I have at the end. I think I have cash, which was a fun setup. Just because it's funny to say cash is a position too. So this was a nice 1-2 start to an impulsive count inside a larger degree C wave. So I was saying, you know, you don't have to shy away from something saying, well, that's an A and a B wave. I don't want to trade a C wave. Whether it's up or down, at some degree, there's impulsive structure or good measured moves that you can trade, and you can always look at the 1-2 start to another move within that move as an even more high probability setup. So here again, we saw that 1-2 start to a third of that C wave, and we're able to set a nice target in the 70 region as a conservative, just measured move target for more of to 100%, and that has filled out very, very nicely. Should be holding, so it did exceed our initial targets, and even has hit the secondary target that we raised up to 80.70. And we added, at the last update, we added a new target of 94.30, which is the 1618 extension. But it needed to hold this wave 4, which it has so far, and it's a little bit messy, but in terms of the smaller subdegree inside that possible start to the 5th of 3. But because this has good structure at the larger degree, we can give this the benefit of the doubt for getting that next extension. And I don't know if I'll have time to get through all of it, but IoT was another chart that started to look very, very similar to cash. And I don't know what the connection is necessarily to those two stocks, or I'll let you guys try and come up with it. I was going to play a game with that if we had time, but had a very similar looking setup. This was, instead of a parentheses wave 3, it was inside parentheses C. It was a 1-2, 1-2 structure inside of parentheses 3. That's been moving along pretty nicely and still finds itself in the same 1-2 potential inside that 5th of the 3 they were just looking at on cash. And the connection between these, and if we had time, I would have gotten to Tandem and Crocs also, is that we started to notice that sometimes things that report earnings on the same day often similar happen to have fall into a similar in-phase structure to their Elliott wave counts, which is something that maybe we'll explore a little bit more on the next time that we join Jody for one of these.
Oh, that's a good ending. Now you have a few more questions and we don't have time to answer the questions.
I mean, we're very accessible on ElliottWaveTrader.net and Stockwaves. You can even interact with me on Twitter and X, or in the comments section for our Seeking Alpha articles under the Stockwaves name. So don't be shy, and it's always a pleasure.
Okay, thank you so much. And Zach's offer, if you want to join Stockwaves, is on the ElliottWaveHub.com/forecasting event page. And this was great, as always, Zach. Just fantastic. Yeah, good to see you again.
You too. Thank you, Jody.
Okay,
Bye-bye.
and I'll stop the recording.